Good morning. On behalf of my colleagues at Colliers and CMS, welcome to this seminar and the launch of our third Real Estate Compass report. As Torsten mentioned, some of you may have it in your hands already, and if you don't have it already, the copy is available at the reception desk and also electronically. It's been a pleasure to study the success and growth of this sector in Europe over the last 10 years. It's our belief and it's set out in this report that the sector in Central and Eastern Europe will see similar growth over the next 10 years. There have been many factors to consider when looking at this opportunity, not least the supply-demand balance currently in the region. I'll go through this in some detail now, but this report includes perspectives on the legal side and also the perspectives of some of the actors already operating in the region. And Rainer from International Campus is one of those actors already operating. First of all, this is a young asset class. On this map I'm showing here the price range per room that is currently being spent by students who are renting private student accommodation in Central and Eastern Europe. So the highest is Hungary at the moment, just above around 360 euros per month being spent on a room. The lowest is actually in Bulgaria. And Bulgaria does not have any private assets, so the figure there is actually the figure for a student renting in state or university-owned accommodation. So the prices that the students are paying are quite low at this point, and this affordability issue is certainly right there right now, and is quite an important factor in considering the development of the asset class in the very short term. If we look, therefore, we have to therefore look at the number of international students. And in the report, and also today, I'll argue that it's really the number of international students that's the driver of demand for this asset class in the Central and Eastern European region over the next 10 years. So here I've put the numbers of students in the 7 cities that we looked at in the report that are currently in 2018 actually sitting in those cities and studying in those cities. You can see Warsaw, 23,000 there, Prague, nearly 22,000 are the two largest, but Krakow, quite significant, nearly 9,000 students as well, Budapest there, 14,000 international students. So this is really the pool of demand that we have probably for the private purpose-built student accommodation assets in the region. Now if we look at the actual assets, what have we got? We have only, in these 7 cities, we only have 20 units, 20 buildings, literally, in those 7 cities. So this is the scale of the asset class right now. It is very small, and I want to emphasize that. Don't want to hide that. That's where we are, and it's at a very, very early stage of its development. So we've only got 20 assets. You can see 9 there in Prague, 6 there in Bucharest, but very little elsewhere at this point. We do have some under construction, so another 8 assets there under construction, 4 of which in Krakow, 2 in Warsaw. So you notice none in Warsaw actually extant, actually operating yet. In Warsaw there are 2 under construction right now, opening within the next 12 months. So really this asset class, as I said, is very, very young in its situation right now. Now, what can allow it to grow? What I've done here on this particular chart is plotted the GDP per capita, how rich a country is, on the x-axis of this chart. And on the vertical axis, I've actually taken the annual investment figures from Real Capital Analytics into student housing across these European countries over the last 4 years. So 2015 to 2018, taking an average as a percent of all investment in commercial real estate. And you can see there the blue dot at the top is the UK. So you can see nearly 6% of all investment on average each year that was done in this country was in the student accommodation sector. So quite significant percentage in the UK. And you can see also there Austria, Netherlands and Denmark also above that line of best fit. So quite significant activity in those sectors. Now that line of best fit is upward sloping. Now that's the important point here. As a country gets richer, as a country grows its GDP per capita, we should expect, in theory, this is what the line of best fit says, that the investment as a percentage of overall investment in student accommodation should go up. That's the conclusion of this chart. So that's really pointing us in the direction of, okay, if these Central and Eastern European countries keep growing very fast, which is our opinion, and certainly faster than the rest of the EU countries over the next 10 or 20 years, then we will see more investment into this asset class over that period. So that's really what I'm trying to show in terms of the relationship. Now, a bit more on the history on the European side over the last 10 years. What we have is an asset class that's had a very steady reported yield in terms of transactions over the last 10 years. So we've got here, again, from the Real Capital Analytics database, the blue line is the median yield of all transactions that took place in the student accommodation sector on a quarterly basis through the last 10 years or so. And you can see that yield's pretty steady between 5 and 7% in terms of the quartile, the dotted lines there are the quartile ranges. So you can see they're pretty steady asset class. So this is pointing to the fact that this is a counter-cyclical asset class. Students are students in recession, students are students during a boom time. So there isn't really any cyclicality to this sector, unlike other real estate sectors. So this makes it interesting in terms of maybe the situation in Europe over the next 1 to 3 years. If we have sluggish economic growth, slow economic growth, then this sector is quite interesting. So it has that aspect to it. So the yield there, 5 to 7%, pretty steady. If we look at the transaction values, what we've, again using the same database, the median transaction value per bedroom or per unit has gone up. So we're looking really at sort of 50 to 100,000 range euros per unit in 2009, 2010. Gradually that has edged up over time towards over 100,000 euros per unit. So we have got inflation going on of that pricing. Now that implies if the yields have stayed steady, that implies that the rents have gone up. So this has been a reasonably lucrative asset class. You've had that steady yield of 5 to 7%, and you've had the ability to gain rental growth if you've owned these assets in Western Europe. So this is quite an appealing prospect with a sector that's therefore quite counter-cyclical, quite defensive, let's call it that, in investment terms, compared to some of the other real estate asset classes. So that's the situation in Europe. Now, what we have done what we did in our piece was asked our client base, what are they thinking about this sector in the CEE region? We conducted a survey last month, and showing you there the location of the respondents who replied to our survey. We actually got in the end replies from 68 clients of CMS and Colliers. Most of them there actually sitting in Central and Eastern Europe, some sitting in Western Europe. Of those respondents, only 11 are actually active already in the private purpose-built student accommodation sector in Central and Eastern Europe. 57 are not. So it gives you an idea of who's active already. Now, of those 11 on the bottom left chart that I've just put up there, we asked, are you active outside of the Central and Eastern Europe region? 3 of them said yes. So of those 11, 3 were also active mostly in Western Europe. There were a couple active in one of them was active in Australia, but they're also active in Western Europe. So they've participated in that activity that I showed you on the previous few slides in the past, and are continuing to do so. In terms of those 57, so on the top right-hand chart, those 57 who are not yet active in the region, we asked them, do you think you'll be active in the future? And 11 of them said yes. 30 said no, 16 gave no answer, so we don't know. But if we then add up the two 11s, so the 11 on the top right and the bottom right, then that means that 32% of our sample thinks they may be active in the sector in the future. And this is a sector in Central and Eastern Europe that doesn't really exist, as I just showed you at the beginning. So 37% of our sample said they may be active in the future. That's quite a significant difference, I would argue, between those two figures, as in almost zero to 32%. So quite an interesting result there. Now some of these opinions on scope. So we asked them, when do they think this sector will grow in importance? Now 6 of the respondents said never. Most of the rest said within 4 to 8 years. So 33 respondents said 4 to 8 years. So it looks like it's a slightly longer term story, but still 19 of them thought that this is going to grow in importance much more quickly. And that might be connected with the economic cycle and situation in Europe and in Eastern Europe. We asked them what's their optimal investment size, so to give an idea of what size of unit they would buy or develop. There wasn't really a strong view between the sizes I'm showing there, between 0 and 30 million euros. Maybe less over 30 million euros in terms of size of individual units. So not too much differentiation there. We did, as I've written at the bottom, we found that we asked them which countries might you want to invest in, and around half of them said Poland. So Poland does receive half of the investment volumes at the moment in the region, as the largest economy in the region. So Poland is seen as perhaps the biggest opportunity at this stage. So that's another interesting observation. In terms of the other countries, it was really sort of Hungary and the Czech Republic that the others were the other countries that people were thinking about at this point. Now, in terms of what's driving the investment and what we need to look out for, as mentioned at the beginning, international students are probably the driver, and it's due to maybe where they come from. Many of them come from Western Europe, maybe the US, maybe the UK. Many come from now in Central and Eastern Europe, come from Asia. And the expectations of those students in terms of their accommodation is perhaps higher than the available stock, certainly the university dormitories that exist in the Central and Eastern European cities. So there is maybe an expectation gap. So that's this supply gap that's there, that these international students want to live in something that they see as a reasonable standard of accommodation. So then let's count up the number of international students across Europe, as I've done here on this chart on the x-axis, and compare that to the investment in student housing as a percent of GDP, so as a percent of the size of the economies in various European countries. And you discover an upward sloping relationship. So the higher the number of students that are international students that there are in a particular country, the bigger the investment that's going on as a percent of GDP in terms of that commercial real estate investment in this sector. So this again is indicating to us that you will see over time, if you grow your international student base, then you will see more investment into this sector compared to the size of the economy. So that was one relationship that we found. We also found in the report, I've set out similar scatter charts looking at the monthly living expenses and GDP per capita versus the transaction values. So those relationships are also upward sloping. So that means that again, if you have a higher, richer country, GDP per capita being higher, or monthly living expenses of the student being higher, then you will see higher transaction values per unit. This is what we found in the report. So these relationships are all there, and they're all positive relationships, and all suggesting that over time, if this international student population and GDP per capita grow, then this asset class will grow. So within Eastern Europe, Central and Eastern Europe itself, what we do have is, as I showed you those absolute numbers of international students on the first slide, that as a proportion, as a percentage of the student base, that compared to across Europe, which is what we've got here on this chart, that in Central and Eastern Europe, that you've got a higher proportion. So Czech Republic in 2016, according to Eurostat data, had nearly 10% of all students being international students. Second highest in the region, Hungary, they're at 5.7%. But all of them, even Poland, they're just slightly below probably the EU average, but the rest are all towards the upper end. So international students are already becoming a more significant portion of all students in these countries. And then we've got to throw in that the demographics are changing in Central and Eastern Europe. We've had very low birth rates, particularly in the 1990s in the region, and the number of students in these countries has dropped. And throughout the decade since 2010 has dropped quite significantly in some countries. So therefore, these proportions are important. These international students are, in effect, replacing domestic students in the eyes of the universities, and therefore, ultimately, in the eyes of the governments. And you've got to think of this in terms of the perspective of a government. If a student comes from the other side of the world to study in Poland or in Hungary, and they study there, there's a chance they might stay. They might learn the local language, and they might grow roots and live there. Now that's an addition to the labour pool. That's a high quality addition in terms of that student obviously gaining a decent education and staying and being part of that economy going forward. So this is important for universities to consider, maybe for governments, that this is a replacement population for a weakening general demographic in the region. And this is also another reason why in the report we kind of basically ignored almost completely domestic students and the number of domestic students and how they might grow, what their demand might be in terms of thinking about private student accommodation. But the important point here is that we do have higher numbers of students in these countries, and indeed, actually in 2000, there's more recent data for Czech Republic in 2018, which is the local government data suggesting that actually the proportion in Czech Republic might be nearer 20% of all students being international, which is quite an amazing figure. And I've been trying to verify that figure. In Poland, the national figure in 2017 was actually much higher than Eurostat figure at 5.6%. So these numbers are growing very fast as a percent of the whole. So then moving on to, okay, what's the shortfall? So this is really what we present in the report, and what can we see could be the case in 10 years' time, in 2028, end of 2028, what might be the number of beds required to address for the market to supply in terms of the potential demand from international students. What I'm showing here is the shortfall if 20% of all international students, so only 20% of international students demand a bed in one of these units. And I've modelled that against the supply that's either constructed already, in construction, or indeed in the case of Prague, in pipeline. And the result that you can see there, nearly 8,400 bed deficit in Warsaw, nearly 1,800 bed deficit in Prague, and so on. At this level, Bratislava and Bucharest have surpluses. They already have some assets, and according to my modelling, that the balance there is a negative balance, and there is a surplus of beds at this point. But if we look then at the valuation of that, if I then use transaction prices for the assets in Europe and use an analysis of that versus GDP and monthly expenses of students, I calculated that those shortfalls would be worth 1.2 billion in terms of stock. That would be the stock value of adding those shortfalls to the current stock base. So 1.21 billion extra euros worth of stock there. Now, I modelled if half of international students, so I did various scenarios in the report of the percent of international students that would demand beds. If half of them did so, which is high, then we would have a much larger shortfalls. In fact, we would have a shortfall of 53,000 beds across the CEE 6 countries in these 7 cities. So it's quite significant numbers here of numbers of beds, and the valuation of that 53,000 beds is 4 billion euros of stock. So quite significant numbers there. Now, on top of that, and I didn't, as I said, didn't really emphasise in the report, if we modelled also that domestic students would start to demand these beds, if 1% of domestic students in Bucharest, for example, where we have those surpluses, if 1% of domestic students in Bucharest wanted to live in private accommodation, a private purpose-built accommodation, then it would be 1,652 beds that would be needed to house them. So there's certainly a large demand potentially from domestic students, but as I mentioned, I don't really see, it'll be interesting to see what the panel thinks, but I don't really see a big demand from domestic students at this point. So moving on, how can that supply shortfall be addressed? We asked on our survey, is there enough private product in the region? Most people said no. So 57 who responded, 50 of them said no. So there's quite clear majority there saying that there isn't the assets, there isn't the supply. So that was in line with the modelling that I've just showed you. How do we address it? Well, we have to develop it, and that seemed to be the majority view of the respondents who answered that question that we posed in the survey was yes, we will develop it ourselves. So that was quite clear as well from the survey. Now finally, just to sum up, before I hand you over to the panel, what are the key pointers from the report? There is a supply shortfall even now, and it will be there, it will stay there, and it will grow if the number of international students grows. And certainly in my modelling, I do believe that that will be the case, certainly looking at the dynamics of the last few years. The shortfall in those 7 modelled cities, just taking those 7 cities, and there are other cities in Poland where in particular, where there are private student houses already. But that shortfall is in the range of nearly 6,000 to over 53,000 beds, according to my scenarios. If the incomes of domestic students rise, then they will also demand better housing, and we will stop living at home and so on. They will shift their preferences. It's up to 4 billion of value at the 50% take-up rate. If we calculate a 10% turnover rate on that 4 billion, that will mean 2.5% of all sector investment volume. All the volume in commercial real estate in Central and Eastern Europe will be 2.5% of that. So it starts to register on the radar screen properly. The legal environment, as you'll hear maybe during the panel discussion, we believe is quite friendly. It's relatively friendly at this point. And then finally, well, the shortfall needs to be sorted out. It needs to be developed. So really, over to the developers. Thank you very much.